when we add in nature into capitalism, then suddenly we have the same capitalistic powers pushing the world in a better direction. And I think we're seeing more and more of those examples. And I'm excited about those kind of scaling across the world. So those are a couple of things that I see that make me quite excited about the next 5 to 10 years.
Welcome to The Sustainable Edge, your podcast that moves sustainability beyond talk. You get to hear sharp perspectives and leave with insights you can put into action. I'm your host, Joachim Nahem, and this podcast is produced by Position Green. Today's guest sits at the intersection of capital, climate, and entrepreneurship. Nina Siemiatkowski is the founder and CEO of Milkywire, an impact firm helping companies design and manage programs that support their climate and nature goals. Her path has been anything but linear. She started in a successful corporate career, later became a photographer, and 8 years ago founded Milkywire to rethink how capital can accelerate climate and nature solutions. She's also co-founded Flat Capital, a publicly traded investment company backing frontier technology companies such as OpenAI and SpaceX. And she's also had a front row seat to one of Europe's most iconic scale-up journeys through Klarna. And this conversation comes at a fascinating moment. Climate increasingly seems to be taking second, or perhaps even third stage, as businesses grapple with geopolitics, economic uncertainty, and AI disruption. At the same time, planetary boundaries continue to be crossed, and the pressure to act has arguably never been greater. Meanwhile, carbon markets have been going through a credibility crisis. Climate tech funding has slowed, and many businesses are reassessing what real climate leadership actually looks like. But beneath the headlines, the market is also maturing. Serious buyers and long-term investors are still moving, just more selectively and perhaps more quietly. So in today's conversation, we unpack the rapidly evolving climate and carbon market and how companies can navigate with both integrity and ambition. Welcome to Sustainable Edge. Nina, so good to have you with us.
Thank you. Thank you so much for having me.
So tell us a little bit more about how you got here. You had a little bit of an unusual journey in terms of working in the corporate space. You've been a photographer, you've been working on the investment side, technology, and now running Milkywire. Tell us a little bit how you got here and what's your conviction that climate and nature needs a different kind of actor?
Well, so to back things up, I stumbled into the problem that I'm working on solving, and I sensed that it was a major problem that perhaps not enough people were working on. And at that point, I said to myself, okay, now I'm aware of this problem, and then I'm obliged to do something about it. But to back things up and put that in a bit of context, in 2012, I went to Africa, so 14 years ago now, and biodiversity and climate were really not top of mind for me at this point in time. But I followed this pride of lions that I was photographing for several years, and I started to see the broader picture. I saw biodiversity loss. I saw human-wildlife conflict. I saw climate change, the weather really being very irregular, and how all those things over time I realized they were connected. And just looking at the lion population, because this is where it all started to me. At the time, there were around 20,000 lions left in the wild, it was said, which was already a 50% decline over the last 20 years before that. And I think today, maybe it's just 10,000. So I became interested in understanding what's going on. Could I contribute in any sort of way to this very particular issue? And who was already working on it? But the more time I spent on this, the more problems I ran into on how philanthropy works, how conservation work is funded, and I became more and more frustrated with that individual problem. And I learned more that on a very basic level, there's this huge, you could say, contradiction that everything in our society depends on nature. So what I'm wearing today, what you're wearing, the table we're sitting at, the computers, the food on our plate this morning, everything comes from our planet, from nature, but we are extracting nature all the time without really investing back into it. And broadly speaking, the main funding that goes into protecting and restoring nature is philanthropic funding. And of the total philanthropic funding globally, it's less than 3% that goes to climate and nature. So the gap is really massive. And even when funding is well intended and meant to solve a problem, and you've seen this, I'm pretty sure, during your career, it doesn't always create impact. Sometimes it can have adverse effects. Sometimes the money doesn't even reach the project. Sometimes it's hard to understand whether the activities are effective or could be more effective. So Milkywire grew, or the idea about what we set out to do came out of that frustration. So I was trying to contribute to lion conservation and then realizing how hard that was, but then even more understanding everyone is facing this issue of investing or contributing to nature and climate. And that's what I've been doing for all these years.
So, Nina, you've built companies and you've invested in scale ups. For entrepreneurs who are building climate and nature solutions today, we still hope there are some of them. What separates those who will truly scale from those who won't? And what's the most common mistake mission driven founders make?
I think one big mistake is looking at a green company as a separate category. Uh, because on my books, it's really not. It's a company building a product or a service that fits this new economy that we're moving into. And once you see it that way, I think the normal rules of building a great company apply. Um, and the biggest mistakes are also the same ones as you would see anywhere else. That said, I think there's been a couple of issues throughout this. Uh, One for sure is this premature scaling. So we have to scale because the world needs us to scale, but the market isn't there. So founders maybe raise too much money, they hire too fast, they build too big before the market is really there. And you get a couple of
We can relate to that. Sorry.
and you get a couple of early customers, and you think then, oh my God, the market has arrived. But one customer is not a market, and two is not a market. And I think we overestimate because we want to, because there's this passion impact thing. We want to that this market is going to kick off, but we underestimate how fast a new market actually does kick off. And at the same time, then, which is going to be the next phase, I think we underestimate how fast it goes once it does.
And on exactly that note, doing the right thing and making an impact, how are you trying to solve this differently? You mentioned that charity or philanthropic efforts, although laudable, they may not sort of add up to really a big difference, or that they may be too isolated and maybe not tapping into a broader sort of market mechanism of addressing the problem of both awareness, but also raising enough capital to make a difference, or coordinating efforts. So what's different with how you're doing it? What sort of your, is it science? Is it market? Is it coordination? How are you going to change that? What are you doing differently?
A small part of that whole equation, right? But talking about like who we are and what we do, the company has evolved over the years. But today, we think of ourselves and talk about ourselves as being an impact firm. And so in practice, that means that we exactly solve the problem I was pointing to, that we help companies and foundations to fund climate and nature work in a way that is strategic, credible, and actually creates an impact. And doing so by, I mean, there is a golden way of doing this and being scientifically rooted. And so we're basically following all of those processes and doing that really well. That's the backbone of everything we do. But our work is split into two main parts. So one is advisory. That's developed over the years, where we help companies understand the space that they're particularly interested in, then set a strategy, build up an impact program. That's the projects that they want to fund, and also make decisions in areas where standards and guidance is still evolving, or are still evolving. And the other part is the project funding itself, where we then set up the scientific framework, we set up the governance structure, we find the advisory groups, we find the projects, we vet them, we structure the funding, we follow up, we manage the reporting. So it's like a whole suite of solutions connected to ultimately what the companies should be doing themselves, but it's so much hard work that we can obviously do this much more efficiently. And then one big part of what we do today is in durable carbon removal, um, and that's a service, and it's a service that means helping or new ways that remove carbon out of the atmosphere and store it long term. Just to
And
be
I want
super clear.
and I want to come back to that without going down into sort of technical rabbit holes, but understand a little bit more about various efforts or approaches in the carbon market, whether it's removal or credits. But let me ask you first, in terms of how you approach, whether it's companies or organizations, how do you sort of convince them about the urgency here? Because you mentioned the sort of the lion population as being an example of call to action, or understanding this in a perhaps more most personal and very compelling way. And we know from everything from movies like Free Willy or other things, once we have sort of animals into the mix here, and people kind of relate to this in a different way than dry scientific text, or sometimes sort of what we would call maybe hard evidence. But at the same time, we're being told that um, nature, planetary boundaries. I mean, it's sort of never been more urgent. And Johanna Rockström, who will be a guest on this podcast as well, and I'm sure many people out there, including yourself, Nina, have heard him speak about this sort of the connection between nature and climate, and nature being, one of the very important buffers also for climate. And that it's essentially not sustainable the way we're running our economies, and how nature is unfortunately kind of a loser every day. And whether we're talking about species or forest coverage or whatever it is, it's having a sort of negative impact, not just on nature, but also on climate and the resilience, and in many ways the self-interest of businesses. But my question, I'm getting to it, is
I will.
how do you sort of convince companies? What's the argument? Is it aren't you alarmed about this? Aren't you seeing what's happening? Is there sort of moral compulsion, or is it a market, a self-interest that your supply chains and your business is also facing risks? What's your playbook for getting people to care about this? I guess that's my question.
So while lion conservation was where I started, it's uh, something that we are not spending time on today, and we're almost doing. There's almost zero conservation work actually happening from the corporate side today, um, in terms of what we are working on. Uh, I I'm not really spending my time trying to convince anyone to, although I wish the world was different, but rather there is so much guidance and compliance coming into play, and there are hits to supply chains, um, and all of these factors kind of add up to, for some companies, uh, the ones I would say who are forward thinkers and long term, um, they see a need to start working on these topics. Um, and in that context, we can come in and help and think of, how are we then going to do this? How does this make sense? How are we addressing our negative impact, both from a climate perspective, but also from a biodiversity perspective? But I think this area is the next frontier, you could say, for corporates to really double down on how their value chain has negative impacts on nature and biodiversity, and how to then restore alongside their value chain. I think we're going to see a lot more of that in the next 10, 20 years. Um, I think one of my hardest lessons as a founder has been looking myself, honestly, like in the mirror, about where we are versus where I want to be, where I want the business to be. But this is not for impact founders per se, but for any founder, um, making the right decisions needed to still be around when the market actually does turn up. So I think that's the and I while I am optimistic, and I I think we'll need all of these entrepreneurs and solutions. I really hope that as many entrepreneurs out there as possible are careful enough with what type of capital they take in and what they sign up for so that they are there when the market actually arrives. Because that's what worries me at this point, that we just we 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 time it wrong. And then I think the other part, which is kind of tied to this, is confusing impact with growth and profitability. Um, for for my based on my journey, in the early days, like 7 years ago, I sometimes had these conversations where what's most important, impact or profit? And I got so frustrated just having that conversation because, of course, the impact is that's what we're there to deliver. But unless we're profitable, we're not going to be able to deliver impact long term. And so this is keeping that straight is essential and something that I think impact founders can really go wrong on. But this beyond that, it's the same thing, extremely hard work, being brave, calling like really tough shots at times, and then of course a lot of luck.
So let me ask you, um, with the rise of carbon credits and carbon removal, which you just mentioned, um, can companies essentially buy their way to net zero? This idea that we as a company, we're saying we're not going to have emissions by 2030 or 2040 or 2050, not just from reducing our own emissions, our own direct emissions, but that we can buy into a project that does conservation or something else that's good for nature and climate, and thereby call ourselves net zero. So how does that work?
Well, I think you have to keep several things in your head at the same time to unpack that properly. Um, eh, First, I think just looking at where we're coming from in a credit market with avoidance credit and all those types where it's like somebody else is going to solve a problem and then that you can use that credit. You have the others that we are spending our time on is durable carbon removal. So a service ultimately of removing, sequestering carbon and storing it permanently, where it's actually being removed. So I think that's just holding that in the back of your head as you go into looking at this. And so this buying your way to net zero, I think is the wrong framing because it does sound like companies can just avoid reducing emissions or pay for credits instead. And for sure, that's the place where the market kind of came from. But that is not a credible pathway. And I think we've all agreed on that that's not, well, maybe not all, but at least I think you and I are very much on the same page on this one, that that's not a credible way forward. But I also think we need to be a bit careful not to misunderstand how companies will actually use durable carbon removal, so CDR. No company, I think, is going to buy CDR for hundreds of dollars per ton if they're cheaper solutions that is actually available to them. So the price right now of CDR is very high. And so the important word here is available. There may be cheaper ways to reduce emissions somewhere deep in your supply chain, for example, in your industrial production. But if the company doesn't control that part of their value chain, it won't be possible to make that reduction happen. And in that case, buying high quality removal may be the only way to neutralize this emission.
So CDR, just to back up one of the reasons it's expensive is because the technology hasn't been scaled yet, and it is sort of
Exactly.
maybe.
Yeah.
Sorry again?
Exactly, it hasn't yet. But I think what I wanted to add is that in contradiction to the credits that many are used to, CDR isn't and shouldn't be treated as a weaker form of climate action. Because for some emissions, CDR is really the simplest or cheapest or most practical mitigation solution, like aviation, shipping, and in industry. In some of those cases, net zero will come faster if we use CDR. And so I think if we, and this is where there's still confusion and uncertainty around this. So companies that want to reach net zero, they will need to use carbon removal and sometimes other market instruments, of course. But that does, of course, then not replace decarbonization. It's just a way of how net zero is going to be reached.
So if I extrapolate here, there's sort of three legs here to how we get to net zero from a company perspective. One is obviously working on your own emissions, whether they're direct emissions, scope one, scope two, your use of energy, but also scope three through your supply chain. So doing things that can reduce your emissions, and especially where for scope one that you control. But then you're also saying that carbon removal here is a credible and will be an important part of this. And I think most companies, whether it's direct or in their supply chain, this is an alternative, or it will be a discussion. What technology can help remove some of those emissions. And then thirdly, there will be other maybe market mechanisms, whether that is carbon credits into credible projects where you offset. And again, this is all a little bit in flux. Not all of it is regulated, and there seems to be sort of different trends in different markets. But does that sum it up, that these sort of three legs here would together give you a direction towards net zero? And this is kind of what we need to think of conceptually.
I would say so. And companies that have, I mean, it's quite uncommon for companies to try to reach net zero or full net zero today. Most targets are further down the line,
Yeah,
24.
2050, basically after the
Um,
CEO is no longer there.
but what we do eat more is this concept, and we just released a white paper on it, is this operational net zero
Mhm.
concept where companies cover then scope one and two and business travel. So essentially the emissions that they have control over. And once they've done everything they can, they used CDR, durable CDR, for what remains then. And so when we wrote this white paper, we found 158 companies that have net zero targets, operational net zero targets for 2030. And so this is also a really practical way to start to kind of add to that picture what you're putting forward. Um, uh, we know that CDR will be needed. These companies that have an operational net zero target, they will be part of building that market to bring the prices down to the point we talked about earlier, and learn how to do this properly before the actual net zero target date arrives. Because this is
Yeah.
part of the complexity. If everybody's just waiting for a market to happen tomorrow and nobody's investing in it today, it's just not going to be there. But these 2030 companies, we call them, they are part of that. And of course, Microsoft should have a lot of credit because they've been building this market very consistently over the last years.
Let me ask you on CDR, on carbon removal. Do you think we're going to see a moment where this actually scales? So for all the naysayers who saying it's too expensive, it can't be done, if we rewind 10, 20 years ago, the same things were said about renewables. It's too expensive. Solar, wind, it's going to need subsidies forever. And right now, we're at this juncture where renewables are so cheap. Actually, in Europe, solar has never been less expensive. And the market is moving towards renewables, not to sort of necessarily save the planet, just because it's less expensive than gas or petrol, with the prices being obviously impacted by what's happening in Iran and the Strait of Hormuz. But we're sort of having this moment where renewable energy is extremely competitive, and in most cases without being subsidized. And it has been scaled, and it is sort of looking as a real alternative. Do you think we'll see something similar on carbon removal in terms of this being more just the market saying this makes sense?
Had you asked me like 6 years ago when we started in this space, I think I didn't know enough, and my answer would have been very different from what it is now. And also, a lot has happened in these last 6 years. So I am 100% confident on that this is a market that is going to develop because we need this market. We have become experts at emitting carbon, and we need to become experts at removing carbon. It's just in a world where humans are dominating the planet, the so-called Anthropocene, we just need to. We can just keep on going, and even Johan Rockström, I mean, he brought it up as one of the important tools. It's There are multiple tools, but CDR to store carbon permanently is essential for us to reach our global targets. I'd like just to add a thing that during the 20s now, it's sort of the time where we test it out, and that's been our role. So when we started in CDR, we only did catalytic purchases, like early stage, to prove technologies to come out of the lab and show that it works. And so the 20s, from our perspective, has been a lot about just making sure that this industry starts to develop so that we have it later on to sort of scale it. And now we're not at 2030 yet, but looking at how far we come to date, it's clear that these technologies are working. We didn't know that 10 years ago. Like, it is working. It's expensive, but it is working. Um, and and I think that's just key to kind of land on that. This is not some strange thing that hasn't been tested outside of a lab. It's been tested outside of a lab, and companies are acquiring, sourcing CDR to reach their targets. It's already happening.
That's good news. And let me ask you, Nina, I'm quite fascinated that you, if I can say this, belong to two worlds, right? You sort of have one foot in this climate space, and we're now talking about, the complexity of carbon markets and net zero, and I think, the sort of world and terms that a lot of the listeners are familiar with and have some kind of connection to this climate space. But you also belong to another world, which is this fast moving tech entrepreneurship, scale up. And for those who are not part of it, it can seem, like it's, first of all, it's taking a lot more space. I think we talk a lot more about tech, AI than we do about climate. There's definitely a sort of trend of tech and AI here grabbing all the headlines, where at least many would say, unfortunately, climate is not on the first page, second page, or third page of any newspaper. It's not, in the headlines the way it was 5-6 years ago. So tell us a little bit sort of how these worlds come together, both in terms of how can climate maybe learn from this very fast moving, booming tech and AI space, where obviously capital is not a problem. We see these headlines of, these huge sums of money being invested. What can we kind of learn from these two different worlds? And also, what can tech learn from the urgency on climate, and how do we sort of get them more involved? I know it's a big question, but it fascinates me, since you have a unique, I think, viewpoint from both worlds. How do they come together? How do you work them?
I don't know if they come to. I mean, of course, they do come together. But for sure, I mean, we have a big problem, right, with capital not really flowing into to the space in particular right now, and it's not headline news around climate unless it's something negative. I think, um, but let's not forget, when internet came back in the day, everybody thought that was also just something that would go away, and then we saw companies crash, and then the second wave came, and I think it's exactly that right now. Climate and nature has not gone away. It's still moving, and as you said, more quietly, sort of under the surface, and so we're gonna see a lot more. But as long as this general consensus isn't there, because we have decided that AI and tech is the thing right now, and so money will flood in because we have conviction, and capital just follows conviction. So I don't
In the
think
same way that it did in climate 5-6 years ago, when we saw sort of
exactly. So
premiums and everybody was jumping on the bandwagon of ESG and climate tech.
and so right now, I mean, I think you can learn from what's happening in with internet and tech and AI and how it's been going up and down, and there's been skepticism. It's going to be the same journey. The bottleneck is in dollars right now. I think it's really about belief and long term perspective. And I think fundamentally, and I think quite a lot about this one, I think that we are underestimating the transition itself, the fact that we are in this new era where we are the dominant force of the planet, and the planetary systems that we depend on. And our entire economy was built on extracting from nature without paying back into it. And that model is ending. Whether we like it or not, it's going to end in one way or another because there are like their planetary boundaries. Like that's the definition of it, right? But I think like so if we put the actual investing in tech aside a little bit, this transition isn't only about the technology, although that of course matters enormously to solve these problems because we have to keep on doing what we're doing, but in a different way for it all to sustain. But it's also about this knowledge of investing back into nature, and that I think a lot about. And I think take fishing as one of my favorite examples. An ocean with no fish doesn't really deliver any profit for anyone, no matter how advanced your fishing fleet is. But an ocean you've invested in, and there are these incredible examples out in the Pacific where they have set off certain areas, they set up rules, they just defined how we can fish and started investing into the ocean in these places, and the ecosystems have bounced back and started to produce fish. And these oceans, then, if you care for nature in this way as a service, they would deliver profit for generations to come.
I
And
want to challenge you a little bit on that, meaning you move in the same space as some of the really big names in tech and founders. And at least publicly, we don't hear them talk much about this problem. There doesn't seem to be that kind of awareness around that. There's a problem of the commons here, or that there are finite resources. If you've invested in SpaceX, OpenAI, if you listen to some of these very influential CEOs and founders now, maybe I've missed something, but I don't hear them saying much about climate, or we need to solve this, or that this is also a problem for our business in terms of, if this collapses, or planetary boundaries, and this will obviously have an impact on ability to sell products to consumers or other businesses. I don't ever hear climate coming up. Why is that? Do they lack understanding? Do they lack conviction?
um, I honestly don't know because to me, having gone to business school, this is fundamental economics. It's not about religion. And it's never been. It's not a moral crusade that we're on. We're on a journey to make sure that our society and the underpinning of our society is still there to bring profit. Not because I love trees and want to hug them, but because I want to make sure there's food on the table, we have clean air, we have clean water, we avoid conflict, etc. And I think it I think more and more business leaders and politicians around the world are understanding this. And I do think that the countries that will invest in their natural systems will be the ones with real prosperity in the next century. And I also believe that China, and this is, I guess, controversial to say, they have understood this. They're by no means perfect across many topics, but they don't have their own oil. They have a huge population to care for, and so they're moving seriously on transitioning their economy, building out clean energy at scale. They just launched their own reporting standard this year, and well, a lot is happening, and I'm curious to see when the rest of the world is going to
Yep.
catch up on this.
And just to be clear, it's not on our podcast. It's not controversial to say we've had previous guests who pointed out that in this sort of U.S.-China rivalry on all things to do with geopolitics, AI, etc., climate should also be seen as one of these competitive areas. And right now, China seems to be winning. We've had, including Simon Mundy from the Financial Times, speak about this, that China seems to understand really the advantages of investing in tech. And if you look at EVs now around the world in terms of the top 20 EV makers, how many are Chinese and how they've taken a bet on that. But as you say, they seem to be best on everything, whether it's new coal mines or investing in renewable energy. They seem to be hedging, but there's obviously a lot of money going in with that type of size and determination into climate technology, and can move maybe faster than some other countries.
It's an interesting data point that 90% of the world's countries don't have their own oil. And for anyone who doesn't have their own oil, it doesn't make sense to not transition. But the rest of the 10% that have their own oil, that's one of their core pillars of their economy. And so, of course, they're going to protect that. Or I think there are going to be a lot of conflicting forces going back and forth. But China doesn't. And so China, for independence, for resilience, they need to move. And I think all the other countries who are in the same situation should look at that case.
So on that self-interest note, whether you're a country or a company, like how do we communicate this more clearly that it is as you said, it's not a moral campaign as such. It's a self-interest, and it's managing risk. If anything, boards should care about risk. And we live with heightened geopolitical risk. Why aren't we getting more sort of climate risk? It used to be there, but then it seems to have left the room for boards or CEOs, again, or even for fiduciary responsibility for funds who are managing other people's money.
I think
What can we do? What can we do to elevate that sense of risk and self-interest?
I think we are going to see more of it. I think the last phase, when it was the big thing, it was also the phase where companies would hire their first sustainability, like CSO. It was the time when they started getting understanding their emissions, understanding their negative impact, getting the accounting right, getting the board on top of this question. And then they've done these like easier fixes, I would say. And now we're getting into a new phase on this journey. While it's not top headline news, it's maturing, and we're getting to a place where it's like, now we have to get to the tougher parts of this journey and get to it. And when you have oil prices going like this, on one hand, suddenly EVs across all industries will look much more attractive. And so I think this is going to come together, and also China showing that it's possible, and bringing competition to Europe and the rest of the world with what they're doing is just going to eventually tip the table in the other direction. It's a big tipping point. Our entire economic system is about to shift, and I don't know exactly when this is going to happen, but it's going to happen. Um, uh,
And we are seeing signs of it. I mean, to be slightly optimistic here on EV sales, I believe they're up not just in Europe, but most specifically in North America, in the US. Consumers seem to be understanding that it is perhaps a good idea to have an EV and not be, as you said, subject to fluctuating, or at this stage, very high gas prices. So I believe the data showing that EV sales are up actually tremendously in the US. But if we were going to end on a sort of broader optimistic note, Nina, tell us sort of why you still believe that we'll get this right. You said, there are certain market dynamics here and that it may just be slow, but anything else that can give our listeners a sense of optimism in these times where we're maybe a little bit short on it?
I'm quite optimistic.
I know
Maybe
I've been hearing it. I want you to share this optimism and energy with everyone here. I think we need it.
Well, I think there are two things that make me optimistic. One of these things made me really optimistic already a couple of years ago, as I was listening to people from Stockholm Resilience Center that were talking about these tipping points. So coming back to tipping points, but there's theories around tipping points, and the closer you get to a tipping point, the more chaotic it will get, because the forces holding back the old system are going to fight to keep it that way. And this was even like 3-4 years ago, when I sat listening to this lecture, and I thought to myself, oh my God, we are approaching a tipping point. And since then, it's just gotten more and more chaotic, and people tend to get pessimistic then instead. But I'm thinking, well, this is kind of what this means. Like, our economic system isn't going to just change. People are making a profit. They're living really great lives based on the current system. They have no interest of moving this and shaking it up in any sort of way. And so, of course, then we're just going to have more and more and more fighting as we get closer to these tipping points. And then eventually it will flip over, because the dynamic of the new way of doing things is also going to start having interest, and also proving the points. And a cleaner society, clean water, etc., is just a better society. If we have more fish in the oceans, better for everyone, etc. And so I think that, and also the rise of more AI and technology will add to this. In AI used in the right way can also help us solve a lot of these problems. So those are two things that make me quite optimistic. The other thing that I want to also touch on are these new mechanisms that we see across the world of paying for ecosystem services. Mechanisms that unlock revenue for restored and healthy ecosystems. And so GEP as an alternative to GDP, that's tested by China. So gross ecosystem product, where you value ecosystems as part of your economic system. Or in the US, you have similar solutions in practice where you're able to unlock massive investments into restoring nature, where nature provides the service. And so I think when the economic system and the climate and nature kind of come together, so when we add in nature into capitalism, then suddenly we have the same capitalistic powers pushing the world in a better direction. And I think we're seeing more and more of those examples. And I'm excited about those kind of scaling across the world. So those are a couple of things that I see that make me quite excited about the next 5 to 10 years.
From a nature and climate perspective, I think we can say we hope you're right, and that this will succeed. But Nina, thank you so much for joining our podcast. It's been really refreshing to hear your take on things, both as a entrepreneur, investor, and somebody who's obviously given this a lot of thought and seem to have a mission in life, actually, on doing something about this. So we love having people on the podcast who speak with passion and conviction. Thank you so much for joining us, Nina.
Thank you for having me. Appreciate it.
That's it for this episode of Sustainable Edge. If you found today's conversation inspiring, make sure to subscribe and leave us a review. It helps more sustainability leaders find us.